Hey EKFG family, it's Aaron Kane here. I'm actually shooting this video from my home study after the Astrom Awards in Queensland 2 weeks ago, about 10 days ago. I was feeling a little unwell when we got home, and yeah, I came down with COVID from Queensland. So thank you very much. My wife and my son Max also came down with COVID. My daughter didn't, which is a bit odd, but look, we're all tested negative today, so we'll be out and about tomorrow, back at the office. But yeah, it was a strange feeling on Saturday. I couldn't have had no sense of taste and smell, which was really frustrating, being someone that loves his food. But look, want to just give you guys an update on our Weinberg portfolios for the Q3 for 2022, end of September quarter. Look, it hasn't been the best year for investors. Obviously, as you know, we've caught up with a lot of you this year already. But hopefully, there's maybe a lot of the worst that's come already, and hopefully 2023, I'm a pretty optimistic person, going to see some positive returns, but let's just wait and see. Look, global share market struggled over the quarter, with persistently, sticky inflation and the ongoing war in Ukraine contributing to market jitters for a lot of people. Investors became increasingly concerned with central banks that would have to increase interest rates more than originally expected in efforts to try and tame inflation. Look, year to date, the US Federal Reserve has increased interest rates by a cumulative 3%. That's till the end of September. And the RBA likewise followed suit as well, as you know, from all the interest rate increases we've had. So the overnight cash rate in Australia went up to 2.6% at the end of September versus only 0.1%, so 10 basis points in April. Quite a significant increase in a short period of time. Look, fortunately, Australia has less of an inflation problem, and hence the RBA's more cautious approach in attempting to cool down the economy. Look, so far, these rapid pace inflation hikes have had minimal impact on the tightest labour market Australia has witnessed in decades, with our domestic unemployment rate still sitting at about 3.5% at the end of September quarter. Look, whilst traditional share and bond markets struggled over the quarter, it's encouraging to note the strong performance of our managed futures allocation over the period, with MAN AHL Alpha Fund delivering 3.5% quarterly return. So MAN Alpha is an alternative asset we talk about there to protect the downside. Look, to simplify how managed futures work, in a highly simplistic sense, they buy assets that are going up, such as oil, and they short assets that are falling, such as traditional bond and equity markets. So they've had a good run at that in the quarter for September. Look, consequently, through utilising a broad investment mandate and investing across diversified investment universe. So, MAN has managed to provide attractive gains against sharply falling equity and bond markets. So that's why they're in our portfolios, to protect the downside. They can make money while markets are still falling. They can make it in different assets. Look, in addition to that, Fisher Global Small Cap Fund did generate a 3.1% return in the quarter as well, to significantly outperform the broader market through investing in smaller companies. This followed a bout of underperformance early in the year, which is typical for small companies in the initial stage of market sell-off. However, they are expected to grow more than their larger peers and larger businesses, so it's necessary to accept this trade-off for stronger performance over longer term. Again, this reinforces the importance of staying invested during bouts of market volatility, as the best periods in the markets inevitably follow hot on the heels from worst periods. So as we see the worst periods, we do then see traditionally good periods after that. Let's wait and see. Look, unfortunately, losses were unavoidable during the quarter, with Resolution Capital and Clearbridge Rares Infrastructure Fund underperforming, because they're more interest rate sensitive sectors that invest in listed property and listed infrastructure, for example. They've got debt, they're leveraged and geared, they buy property and so forth. So they're more, as we said, sensitive to interest rate changes. So they had the worst quarter for a little while. But look, the investment committee, there's been no changes for the quarter in September. We are happy with making portfolio changes over time, but in the quarter we didn't. We remain comfortable and confident in Zenith's ability and their approach to diversified composition of return drivers within our portfolio to navigate this period of heightened volatility. However, we remain highly attuned to both market risks and opportunities which present during market dislocation. So what that pretty much means is that, look, it has been a pretty tough market. We're confident in what Zenith have put forward to us in what we need to do. They're happy with not making changes for the sake of it, and we agree with that. one thing we had a committee meeting last week, which was mid-November, and what we are going to do is start introducing into the portfolio some direct equities in Australian shares. So rather than have managed funds for Australia, we're very keen and been talking about this for some time, is having you guys invest in direct shares for the Australian parcel that we do have for you guys. So, holding direct assets rather than managed funds. So there's a lot more transparency. You get to see there's ownership over them. So look, that's just a little bit of an insight into what's happening. I'm pretty excited about it. We haven't made these changes yet. We are going to do it very soon, but you'll probably see some significant changes to your portfolios with Australian shares started to be listed in your funds as well. So look, that's the update for the quarter, September 2022. A bit of news from us as well. Look, I'll be back in the office from tomorrow. So look, stay safe. Sorry, guys. Happy investing and be in touch soon. Thank you. Bye.